Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing my European opening market comment for Wednesday, September 28th. The dollar is generally higher this morning after the Clinton-Trump debate, as the Trump risk premium on the dollar fades. Also, yesterday's U.S. economic data was generally better than expected. Sterling was the biggest gainer among the major currencies. Cable climbed back above 130 after UK Trade Minister Liam Fox promised that Brexit won't create a legal vacuum at the World Trade Organization and said Britain will still champion free trade. There's some confusion as to what will happen with Britain's membership in the WTO when Britain leaves the EU, because it's currently a member in the WTO through its membership in the EU. Now, the European day starts out with two consumer confidence indices, the French and the Italian consumer confidence. They're expected to be little changed. That could be taken as a good sign, as they've been falling recently. In that case, even an unchanged index could be perceived as positive for the euro. In any event, these indicators have only limited impact on the currency markets. After that, there's nothing on the European agenda until the afternoon, when ECB President Draghi attends a meeting of the German lower house EU Affairs Committee. He's likely to get a pretty cold reception because German voters hold Draghi personally responsible for the weakening of the euro and the fact that they don't earn any interest on their savings. He may get some hostile questions about quantitative easing and whether the ECB is thinking of extending its bond purchases past the planned cutoff date next March. Around the same time that Draghi starts talking, the OPEC ministers will hold an informal meeting in Algiers. In the run-up to the meeting, we've had several different rumors and reports every day. Will they reach an agreement? Won't they reach an agreement? But the latest word seems to be that they won't. Saudi Arabia has shown some willingness to compromise. The Saudi oil ministers said overnight that Iran, Libya, and Nigeria should be allowed to, quote, produce at the maximum level that makes sense, unquote. The Iranian oil minister, however, said, quote, it's not our agenda to reach an agreement at these meetings. Iran wants to boost its production not just back to where it was before sanctions, but back to where it was as a percent of total OPEC output. That's the blue line in this graph. Now, the market doesn't expect any agreement today, so no agreement should have only a limited negative impact on the oil price. On the other hand, expectations are now so low that if by some miracle they did come to even a half-hearted agreement or show signs of reaching an agreement, that would probably send prices up sharply. For an update on the U.S. indicators coming out today, please watch my North American opening market comment. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.